Okay guys, greetings from Not Capital. Embark with us on an illuminating YouTube journey, of course, into the realm of the market structure. So today we're going to uncover the pitfalls that most SMT traders frequently encounter, and we'll try to equip yourself with some invaluable knowledge, alright? So join our educational video as we navigate the intricate world of trading, okay? Let's do this, guys. So today what we'll be talking about is market structure and some common mistakes that SMC traders do, okay? So first things first that you need to understand is the types of structures that we have, all right? Is the types of structures that we have, okay? We have what we call internal structure. Let me just put it right here in terms of writing. We have what we call internal structure, right? And then we have what we call external structure, all right? And then we have internal, external, then let me just say string structure, which is more or less the same with a external structure. Okay, so internal structure here also is the same as order flow, right? So internal, external, and string structure. So these are the types of structures that we have, right? So how do we trade the structures? Okay, we need to understand that market moves from internal to external, right? So it means that the trades that we are taking, they must be coming from where? From the internal structures, right? So as much as we want to take those snipers and stuff, right, at the external, guys, take your trades with the internal structure. And again, the most important thing is that you need to go with the trend. You need to go with the trend. We understand that in terms of trend, we have what we call an uptrend, we have what we call a downtrend, and we have what we call a sideways market, wherein the market is not really going anywhere, but it's just going up and down. Okay, it's just going up and down like this. So these are the types of markets that we have. So when we are trading, you need to understand that you trade from external structure to internal structure. So here I have those two types of structures that I want to show you guys. So what is basically happening here is that you can see here the market here, first things first, is what? It's trending to the upside, right? It's trending to the upside. We can see it's creating a series of higher highs and higher lows, right? It's trending to the upside, okay? So when it's trending to the upside, also another characteristics of a trending market to the upside is breaking structures, breaking highs, creating new lows. It's breaking highs and creating lower highs, and then just like that, all right? So between structure, right, between structure here, what you can see here, there will be an area of demand, right? It means that here demand is greater than supply. That is why that when price comes to supply, it does not respect supply. It just takes out supply, comes back to demand, takes out supply, comes back to demand, right? Just like that. Okay, so the same thing happens just like here. So this is a typical market structure that you'll be expecting: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is a typical market structure. But in reality, let me just put my pointers right here. Ooh, what did I do? Okay, let me put this back there. So in reality, guys, in reality, this is what you will see. Okay, you see price moving to the upside. Let me just get this guy here. You'll see price here. We have this price just like that, and then creates a new swing low or a strong low, and then it breaks structure, right? And then just like that creates a new one, and then it breaks structure, and then after that it creates a new one, and then it breaks structure, and then all of a sudden, oh, what did I do again, man? Let me just do this, put this guy back here, right? Then all of a sudden, because this was breaks of structures to the upside, right? This was breaks of structures to the upside. So guys, my break of structure, how I determine my break of structure is mechanical, right? So I must get at least 3 candles to the opposite direction, right? First things first, to determine the pullback, right? So if I get a pullback with at least 3 candles and it gets broken, that will be a valid break of structure for me, right? So now, moving right along here, we do have a break of structure, and then price comes back, and then as you can see here, when price was going up, it was forming some liquidity again, and then price comes back, takes out this liquidity, comes back to an area of demand, it goes up again, and then from there Here we go, it comes back to an area of demand or OTE, and then it goes just like that, right? So this is basically how market structure is, guys. Nothing much, nothing less, right? So don't complicate things, right? So one of the few things that I saw is that you'll find that someone is saying that, okay, we do have a break of structure from this swing, and then now you are waiting, you come here, you draw, let's say your fib from the low to the high like this. Let's say this was the previous high, and then you're waiting for price to come back to this area right here, right? What else? There is still what is happening inside. There is minor structure or internal structure, right? Remember, we take our trades from the internal going to the external, okay, not vice versa. So let's go and look at this concept and apply this concept in the chart. No, actually, before we try to apply, yeah, let's just go and apply this concept in the chart, okay? So we'll be using GBP USD. We'll be using GBP USD. First things first, we'll be using GBP USD. So here we are. Let me just go to the 4-hour time frame, as I use the 4-hour time frame as my higher time frame, guys. So here we are on GBP USD. So what do I do first? I'm gonna open my chart like this, and then I have a nice zoom in like this. Okay, simple, 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 simple. These are the only things that I need to see right now. I only need to see what happened just not too long ago, because the market will not be trading something that happened way, way, way back then. So just not too long ago, just to see what was happening before this downtrend, because here I can see we have a downtrend here, but then here what was happening before this downtrend, right? I just want to see a little bit of information of what was happening in this downtrend. Okay, so after understanding that, now I can go on to mark out my structures, right? I can go on to mark out my structures. First things first, by understanding what happened previously, right? Then now here what I see previously is that here we had a nice break of structure. We had a nice break of structure. Market broke structure right there. Came, that's my swing point. Okay, then we went up, came down, that's not a valid pullback. Went up, came down, that's not a valid pullback. Went up, came down, that's not a valid pullback. We went up. Here we do have more than 3 candles, so that is a valid pullback. So this will be a high. Then from there, let me just check if market broke that high. Yes, market indeed did break that high. You can see that market broke that high. Then now what happened here? Remember, when price market breaks this high, this will be the demand zone, right? This will be the demand zone here, right? So this will be the demand zone. So when price breaks this high and then it comes back to this demand, we're expecting that what price we're expecting price to go up again, but instead price doesn't go up. What does it do? It breaks this swing low, right? It breaks this swing low, and this is then now what we call our change of character, right? So this is our change of character. So we can see now we're going from a bullish, right? A bullish. Now we're going from bullish trend to bearish trend, right? So we just had this market change character now, right? So now after this change of character, we go again with the market. What happened? What happened? What happened? So we go down. So as we can see here, 1, 2, 3. Remember what I said? 1, 2, 3 candles. That is more than enough to say that this is a what? This is a pullback, and if it gets broken, it will be a break of structure, right? So, ooh, what am I doing up there? Okay, so this will be my area, and then I just want to take this guy. So this guy will be my break of structure right here. This guy will be my break of structure right here, right? So this guy will be my break of structure. After this break of structure, what happened? Price pulled back, and then after pulling back, what happened here? This is not a change of character, right? It just price just wicked. Okay, price just wicked. So this was a valid low. This is a valid low. As we can see, we broke structure, and then we have how many candles? 1, 2, 3, 4. So this is a valid low. So now after price came and did what? And just stripped, right? It stripped this previous liquidity, right? So what does that mean now for me? For me, it means that now this low from here, it will be transferred, guys. You just transfer this low from here to here, okay? This high from here to here. You transfer this high from here to here, and then this low now will no longer be valid. This low will move to here. So what I mean is that this here is our liquidity grab. This here is our liquidity grab, and then our high, this will be our high. Then after here, what happened here? This our low, we're going to move it right here. So this was just a liquidity grab, okay? This was just now a liquidity grab. But before market did that, we could have entered the trade right here, right? So now, okay, let's go again. Now, what did price do? Price again came here, it broke structure. Okay, we'll continue to the downside. Now, what happened now after breaking structure? This is what we have, right? It broke structure, and then we have 1, 2, 3 candles to the opposite direction, right? So, of course, as I said, the mechanical way, this indeed would be a valid pullback after this break of structure. And of course, again, it also took out what? It took out the inducement or the liquidity. So, there are two ways to verify if my swing or if my pullback is valid, right? It has to take out the inducement, and number two, it must have at least 3 candles, right? So this one has 2 strong candles which took out the inducement, right? So now from here, this will be my break of structure, sorry, and then this will be my swing high, just like that. Then from there, now what happened? Now we broke structure, and then 1, 2, 3, 3 candles to the upside. Okay, fine. Just seeing those 3 candles to the upside, this means that this now area here, this area here becomes my low. So it's simple, it's mechanical, right? So that, there we go. And then what happens here? What happens here is that now when this price breaks, this, it confirms the high, right? So it confirmed the high, and then this becomes our new low. And then from there, price came back up, 1, 2, 3, more than 3 candles pullback, also valid. Then now this becomes our new high when price breaks, comes and break this low. Okay, so here we go, price broke this low. So now when we get to the market right here, what do we have? We have this as our previous break of structure, and then this is our previous strong high, right? So this is our previous strong high, right? This is our previous strong high, and then this is our previous break of structure. So what we'll be basically waiting for is that since the price is going to the downside, we'll be waiting for price to come and give us an entry at our order block or at our area of supply. It is quite huge there. So what we'll do here is that we will come and put this here. So usually if this is like this, we enter at the 50%. So we don't just go and enter blindly, right? We don't just go and enter blindly. We wait for market to give us that change of character or our type of entry confirmation on the lower time frame. Okay, so without wasting any time, let's go to the 15 minutes and see what happened in the 15 minutes. Okay, let's go to the 15. So as you can see in the 15, this is our area. It's quite a big area. So what we can do now, we can see that, okay, on the 15 minutes, like literally I use the 1 hour to refine my areas. If I get a big area like this on the 4 hour, I'm just going to refine it here on the 1 hour to something like this. And even though sometimes it might not come back, right? But this is what I do just to reduce that risk, right? So I have my area right there. I have these areas of inducement that are right there. So what I'll be waiting for is that I'll wait for price to come and give me I'll wait for price to come and give me my entry confirmation, and I'll target this low, right? I will target the low that will be formed right here. So let's just wait and see if this low here will be confirmed. Let me just quickly go to the 4 hours so that we full time. So for this one to be confirmed as a low as it is, it needs to take out what? It needs to take out this inducement first. Okay, so let's just play a bit. Good. All right, so what we can see here, there we go, this inducement was taken. So this means that now this low, this becomes our low. Okay, this becomes our low. Then now what we're just simply waiting for is for price to push to the upside and then give us that move to the downside, just like that. Okay, so let's just play price forward and see. All right, so here we are. So this is price, didn't get to that 50%, which is still okay. We can still do that. But then now, let me just quickly go to the 15 minutes. Quickly go to the 15 minutes. Because now price just tapped into our zone, right? Price just tapped into our zone. So this we were waiting for sell positions there. Then price just tapped into our zone. Then after price tapped into our zone, it moved away, right? Just like that. Okay, what is happening here? Do we have an internal shift? Remember, do we have an internal shift? Because we can see this is the internal shift, and then here 15 minutes, you can see here this was the break of structure. So until the 15 minutes break, at least this structure here, that is when then now we can say it's bearish, right? But for now, we can still be able to catch a nice trade if price now comes back to our zone. Let me just check if we have any imbalances. We don't have imbalances, so we can be able to use our golden zone entry just like this, so we can catch a short nice trade. Let me just put this at 50% of that. My stop loss, since this will be a day trade, 15 pips at least, is 13, 16, 15. Okay, and then we'll target the blue area. So let's just see, and let's just play this and see how it went by. Okay, okay. So what basically happened here? What basically happened here now is that price now here at this area, or at this area of OTE, at this area of OTE, okay. So this is my area here. Sorry for that. Sorry for that. My entry. So when price came to enter here at this area of OTE, right? At this area of OTE, you could have entered a trade like that all the way to the blue area, right? Which will give you about a 1 to 10 R, right? But remembering also that we are still what? We are still bearish, right? We are still, sorry, I mean, we are still bullish, right? So as we can see here internally, what is happening internally? That is what matters, right? So we can see, okay, now what happened here? Price did this. Instead of continuing down, we have price here, this is a low, and then now price did what? Price came, it took it out, right? It took it out, which means that now price, instead of going bearish, now we have changed to bullish. Then now internally here, what is happening? We have 1, 2. So here internally, what we can just do now is wait for price to take out some form of liquidity, which should be this pullback, and then maybe come back to our area of demand, right? Where again, we'll still be looking to take more long positions. We would take a long position here to see if price now would deliver, and then our take profit will be at this high, right? As this was the previous high, so our take profit will be at this high, right? So let's just see how price will be delivered here. Okay, broke. Let's go to 4 hour. All right, so what happened here, I want to show you. Let me just go to 4 hour. So this is our 4 hour zone. We're waiting for price to come back here. It didn't. Then it just pulled back. And sometimes this can happen. It pulls back to just this area, and you're thinking to yourself, what actually happened? And if you actually go to our 1 hour, which is where we actually refine our zones, we can see that here internally here we have this order block, right? We have this order block right here internally. And then after this shift here, we have a flip zone, right? This is what we call that flip zone, right? We have that flip zone here. So this should have been where we were looking for our trades. So if we can just close it here and then put it to the top wick, just like that. So this should have been where we were looking for our trades. And then if I take about 50% of that, right? 50% of that, then obviously maybe you could have missed this trade because, yeah, we'll be waiting for 50%. But if you go to the lower time frame, you're going to get the entry here on the 5 minutes time frame, and we're going to get that entry. We're going to see that market structure shift right here on the 5 minutes time frame, and then we managed to get an entry right about here. So let's just remove everything. and go back to the 4-hour now, right? So what do we see now here on the 4-hour now, right? Remember, this was our previous high, right? And then now what happened to this previous high?